Hi, everyone, and welcome to our webinar on convenience, grocery, and liquor stores. My name is Jacob Cole. I'm the marketing coordinator here at CID. Today, Teresa Cochran, our commercial underwriter, will be sharing her expertise and helping you better understand the exposures for these types of stores. She'll be going over the specific learning objectives in just a second, but before I pass it off to her, I wanted to quickly go over the logistics of this webinar. And as you can tell, you're all muted, but there is a chat feature, so you can type your questions in at any time, and we'll answer them throughout the webinar. Also, a short survey will pop up after the webinar, so you can help us improve these webinars for you. So we appreciate you taking the time to fill that out. And without further ado, I'll pass it off to Teresa.
Hi, everybody. Thank you for joining us. Our objective today is to better understand the exposures of convenience, grocery, and liquor stores, to learn what coverages these classes of businesses need, and how to competitively go after these classes of business. What are we hitting on, and what are we binding regularly? Let's start off with what these three classes of business have in common. They are all retail stores selling similar products such as food, beverages, and household items for off-premises consumption and use. They need similar property and liability coverages and may have similar liability exposures such as hot food sales, deli sales, lottery sales, gasoline sales, auto repair, and car washes. To successfully write these classes of business, you need to get to know the owner or worker of the business because most of these corner stores are family-owned and ran businesses. So if you go in every now and then to grab some water, a Gatorade, or a deli sandwich, it could be an easy in to start your sales pitch on finding them a competitive policy. Something you will find out once you get to know the owner is that they may own multiple locations, and they may even own other locations with different family members. I see this all the time with submissions that cross my desk. They own 3 or 4 locations, but each location is owned under a different LLC or corporation. So we are writing separate policies for each location, which is smart on their end because if a location has a claim, it's only tied to one location on one policy, rather than a claim occurring on a policy with all of their locations. This also increases the number of policies you have in force, and you can double or triple the policy count by offering workers' compensation, EPLI, an umbrella, and any other coverages they may need that cannot be packaged with the GL, liquor liability, and property. The first risk I'd like to discuss today are liquor stores. When you're out on sales calls and you come across a liquor store, how do you know whether this is an account you want to go after? Here are a few tidbits of information to help you with that. Look around the store. Is there a pride of ownership? Do they keep the store neat and clean, or do they have a pile of boxes blocking the back exit door, blocking the aisleways? Are their ceilings damaged with water, from water? What are they selling? Are they selling tobacco products? Are they selling CBD, kratom, or THC products? Most carriers are okay with tobacco products. They may not be okay with CBD, kratom, or THC sales. Check cashing may be advertised on the outside of the store, as well as offering delivery services. With the way the market currently is, surplus lines carriers can cherry pick the risks coming their way since most preferred carriers are not writing liquor stores. So make note of what you see being offered and sold so that when you call your wholesaler, you can find out what exposures are eligible and prohibited, and if this is a client you can go after. Currently, our surplus lines carriers are fine with tobacco stores, or tobacco sales, vape products, check cashing, and third-party delivery services. But anything with CBD, kratom, and THC would be a prohibit. Here is a case study of a liquor store risk that we would want to go after. They have 500,000 in liquor sales. This amount of sales seems to be a sweet spot with their carriers. They offer check cashing, and they have on-premise liquor tastings. Not many carriers would be okay with liquor tastings, but we do have markets that will consider this exposure. And the coverages you would want to work on selling to this client would be, of course, general liability. It's pretty standard for all businesses. Business personal property for their inventory. Business income, equipment breakdown, since they have several refrigerators, and liquor liability coverage. If they have employees, workers' compensation and EPLI are always great policies to upsell. The next risk I'd like to go over are grocery stores. Grocery stores come in all sizes, from your small corner market to a large chain type of store. For most carriers, grocery stores are considered to be 3,000 square feet or less, with sales no higher than $500,000. Anything larger than 3,000 square feet or with more than 500,000 in sales is considered to be a supermarket. We can help write the larger grocery stores that fall into the supermarket category, but we're not looking to write the chain stores such as Vons or Albertsons, since they are typically insured by a carrier that offers a special program for these chain supermarkets. So when you go into a grocery store, what should you be looking for? The first thing I would look for is a cooking exposure. Do they have a taqueria, a buffet, a deli, a fast food restaurant exposure? If they do, what type of cooking equipment is being used? Deli risks typically won't have cooking equipment such as a deep fat fryer or a grill, but taquerias and fast food restaurants probably will. So noting an Ansel system is in place over the cooking equipment to trap out those grease vapors is important. Just like a restaurant type exposure, the carriers want to ensure that any fire exposure is minimal. Are there any other vendors or tenants inside the store, like a jewelry counter or cell phone sales? It can be really hard to separate the liability exposure when multiple tenants share a space. So finding a carrier could be difficult if there are other vendors or tenants in the store. What are their hours of operation? Are they open 24 hours? Certain carriers will decline if they are open 24 hours, while others may be fine with it if there's at least 2 workers on each shift. And similar to the liquor store case, are they offering check cashing or delivery? Because again, some carriers are okay with these exposures, while others may not be. Is there a pride in ownership? Trip and fall exposures are one of the most common grocery store claims. So things like making sure the store is clean and neat is important, as well as wet floor signs being used while mopping. The case study I put together for grocery stores is an international market with no liquor sales, and their annual sales are just under 500,000. They do have a taqueria selling tacos and burritos to go, and this is a risk I see quite often cross my desk. And in this case, a new landlord took over the strip mall, and now the grocery store owner is looking to get coverage in place because they have not had coverage. And this is fine. We write risks like this all the time with no prior coverage. And as we're looking around the store, they seem to have proper safeguards in place. The store is clean. So here are some of the coverages you would want to discuss with this client. General liability, business personal property to cover things like their inventory and shelving, business income, tenant improvement and betterments to cover all of the cooking equipment they have installed in their space, equipment breakdown because they have several refrigerators, and food spoilage to cover those refrigerated items. If the power goes out, the customer could lose all of those perishable food items in the refrigerator. So trying to offer them the coverage for those perishable food items with the food spoilage would be a great sale to the client. And lastly, we have convenience stores. There are convenience stores attached to gas stations and strip malls. You can see them at just about every corner. Some may have a heavy cooking exposure selling fried chicken, while others may have hot dogs or just microwavable items. Again, notating the type of cooking and equipment used is helpful when underwriting the account. See what their hours of operation are. Are they open past midnight? Are they open 24 hours? Every carrier has their own guidelines, so knowing this information will help determine what markets are available. Are they selling the CBD, Kratom, THC products? Are they offering check cashing? All of the items we discussed in the previous two cases also apply here. And a big thing convenience store owners want is theft coverage. Why is that? Theft claims are frequent occurrence with convenience stores. So having surveillance cameras, an essential station burglar alarm are great protective safeguards for them to have in place so that we can help find a carrier that will offer theft coverage for your clients. In this case, in this convenience store case study, we have a convenience store, gas station, an oil lube shop, and the client owns the building and is running the convenience store and gas station. But the oil and lube shop is leased to a tenant. The convenience store and gas station are a 24-hour operation, and they do have beer for sale. So there's a lot going on in this example. We have a lesser's risk exposure due to space being leased to the oil and lube tenant. The client owns the building and is managing a convenience store and gas station. So taking into account the items we've previously discussed, such as pride of ownership, looking for cooking exposure, check cashing, etc., we now have to find out, does the lube and oil shop tenant have general liability coverage in place? If not, we need to help them find coverage so that we can take some of that liability exposure off of our client. And in addition, most carriers require that all tenants have their own liability coverage in place. Due to the 24-hour exposure, we would want to know how many employees are working overnight. Each carrier has their own guidelines, but some carriers are wanting 2 workers on the night shift and maybe even a drop safe in order to minimize any late night burglaries. If you are open 24 hours, being able to put cash in a drop safe is a great protective safeguard if there is not a way to deposit cash during the day. Gas sales is a new exposure for us. Some carriers rate gas sales, rate gas on sales, while others rate gasoline on the number of gallons sold. A convenience store supplemental application is a great tool to use when trying to gather all the needed information from a client, because I understand that this can be overwhelming. So utilizing the SUP app will help guide you through some of these items we have discussed. After considering all of their exposures, it would be smart to offer them of course, general liability, liquor liability, since they do have beer sales, building coverage, since they own the building, business personal property for their inventory, and whatever other business property they have, business income, canopy and awning coverage for the structures over the gas pumps. Those can be quite expensive. Insuring the gas pumps themselves would be something they would want coverage for. Some carriers will add gas pump coverage under business personal property. Some may rate for it under outdoor property. So when you are completing the Accord 140, I recommend having a separate line of coverage for the gas pumps so that your wholesaler can, so it's just easier for us to rate for that coverage appropriately. And like in the previous case study, recommending the equipment breakdown coverage due to refrigerators and food spoilage if they have any perishable items. So in these examples, there was not really an on-premises liquor consumption exposure. We only had a minor liquor tasting exposure in the liquor store case study. But even if your liquor is not being consumed on premise, it still can be a crucial coverage. Liquor liability can still be a crucial coverage to offer to your clients since they are selling liquor. And I would like to briefly go over some real life liquor claims examples. I have two here that I want to go over. The first one is a 16-year-old purchased beer from a convenience store. The clerk didn't check for ID. These days, it could be hard to know how old someone is. Teenagers may look a lot older than they really are. So anyhow, beer was sold to this minor without checking an ID. And later on that evening, that 16-year-old was drunk driving and caused an accident with the payout of $580,000 in damages. The convenience store was held liable due to selling to a minor. In this second example, the store clerk refused to sell liquor to an intoxicated person. This patron was later involved in an auto accident, and despite denying service, despite denying selling of the liquor to this intoxicated person, the convenience store was still named in the lawsuit. And ultimately, the convenience store was not found liable, but the expense cost a total of $75,000 just to get them out of that lawsuit. So even doing the right thing and refusing to sell to an intoxicated person can bring on a lawsuit. And I hope these real life examples help you and your clients understand the importance of liquor liability coverage, because these liquor claims generally are low in frequency, but high in severity. So to wrap things up, here are the items we would need to help find you a competitive quote. Again, utilizing the supplemental applications that will help guide you through all of the exposures that need to be addressed and rated for. We do have supplemental applications available on our website, but we can certainly work off of other carriers' applications as well. In addition to those supplemental apps, we would need an Accord 125, 126, and 140. And loss runs are always great to receive so that any credits I can apply to the quote are offered. If they are unable to provide loss runs because they are a new venture or have been operating without coverage, we can definitely consider those risks as well. And if you have any questions, please type those in the chat box or feel free to contact me after the webinar.
All right, thank you, Teresa. As she said, type your questions in the chat now if we didn't answer them during the webinar, and we'll answer them before we sign off, or Teresa can email you after. And after we do sign off, I encourage you all to browse our website. We have tons of tools for you to use, marketing materials, proposal templates, all of the applications that Teresa mentioned are on there. online quoting options, and a ton of recorded webinars on different lines of business and coverages. So don't hesitate to reach out to Teresa after the webinar. And if you have completed applications on file, you can start sending them in now to the submissions email that you see on screen. So also, please be sure to stay on so you can complete the survey and help us make these webinars better for you in the future. I don't see that anyone typed in any questions, but if you are typing them in now, go ahead and just email Teresa. We're going to go ahead and sign off here. So we appreciate you all joining us and look forward to doing business with you. Have a great day.